inflation across the world's financial markets. It began by using pigeons to bridge a gap between exchanges. As time moved on and our customers' need for speed and clarity grew, Thomson Reuters led the way with innovative new technologies, which brought markets and their participants closer together. Today, Thomson Reuters Electron enables the enterprise in a world of change. It powers Thomson Reuters Icon, the world's most open and intuitive application for viewing and analyzing markets. Together, they create a world of possibilities for making faster, smarter decisions, so you can see and seize opportunity again and again.
Welcome back. You're still with us on CNBC Africa with a special broadcast of the MPC special. Still with me right here in the studio is Mabyanine Phiri. He's a portfolio associate at ACM Gold. Chris Hart, chief strategist at Investment Solutions, and Clive Ramathibela Smith, investment specialist at Phiri Incorporated. Gentlemen, thanks again. That proved to be interesting. I was writing down a few key mentions. Whenever Janet Yellen speaks at the Fed, they always were looking at key things, data dependent or patience. The governor spoke about a few things, electricity constraints being one of them, uncertainty with regards to the normalization of the U.S. interest rates and the inflation outlook, talking about wage negotiations. Let me start with you when it comes.
Yeah, so definitely some domestic issues in terms that are going to have an impact on the inflation outlook. And I think one of the main concerns is that wage inflation is actually outstripping productivity. But then also we definitely have that exchange rate issue, and that's going to definitely have a bigger impact if we have to consider when the Fed is actually going to raise rates, and that we might see the rand depreciate quite significantly against the dollar.
So the tone that we saw from the governor was definitely a lot more hawkish. Clive, I know that you've been all about the consumer. You're hoping the consumer would see some respite. The governor said this downward movement in the oil price has been short-lived. So your consumer story, is it looking less and less?
We have seen the recent decrease in the oil price that we've seen. It's not going to be long-lived. We've always known that. But here's the thing. When you've got in a global economic structure where you've got a lot of people struggling, especially in the developed markets, about inflation, and you sitting here, you're sitting comfortably and you're seeing the kind of inflation that we've seen in recent months, you start asking yourself questions. And one of the questions is, the growth is there because inflation creates growth. We all know that. We all agree with that. But the question...
Okay, we're going to pick up on that. So Chris says no, but yeah. Carry on.
Yeah, but here's my point. My point is that we're not seeing the growth that we should be seeing, because the reason why I think the economic growth, one of the spikes to the economic growth, will be the fact that prices do increase. But if your consumer is under pressure, they're not going to be able to live up to those particular increments, and that's what the problem is.
That's the problem. Chris, you are disagreeing.
Your spending power and it diverts resources effectively, and we see this in countries long-run growth, but that's another debate, and it's one of the reasons why we've got an inflation targeting policy. But it's actually quite clear that this inflation targeting policy is in fact a dual mandate. They're looking at growth and they're looking at inflation. If it was a pure just looked at inflation, they would have hiked, right? Because the cost pressures, and this is cost inflation, which actually embeds itself in the economy. It's not something like that when you get demand pull inflation that you could say, okay, you can reduce demand and, you know, that inflation will go away. But in fact, this is because it's costs push inflation, it's wages, it's electricity, it's the strength of the rand. You're pushing up the cost base of the economy. raised rates because of it. But the one thing, it does put the South African Reserve Bank at odds with the community of central banks, which is tilting towards easing. Already the fact that the US is, you say, we're removing the word patience, but we're not going to be hiking anytime soon kind of stance has already sort of put the cat amongst the pigeons as far as the dollar is concerned, and their slowdown may mean that they don't hike rates this year at all, but the Fed has painted itself in a bit of a corner in terms of rates, so they may be sort of forced to hike rates in any case. But the main thing is that we need to be, our rates at a level that is not conducive to saving. We're not compensating our savers for inflation, let alone the time value of money, and if you don't get the saving.
Chris has said if this was not a dual mandate, if it was just about inflation, you would have hiked. From what you heard, Reserve Bank Governor saying that the scope for being more accommodative, if you'd like to say, has lessened. So when can we expect the next interest rate increase, and by how much would you say?
Well, look, I'm not going to speculate a lot, but it was quite clear from the governor there that they are looking at the effect that the Fed rate hike, or if they keep it the same, they're going to look at that effect, and obviously, given the instruments that they have, they're going to assess how it's impacting the rand or the economy. So I predict that that's probably going to happen when the Fed raises rates.
Clive, this divergence in the different ways that the central banks are going, we've seen what the BRICS countries are doing, and the governor did speak about Russia being under pressure there. He did speak about Brazil, India looking better. And then we've got the situation with the developed markets like the US and Europe. Where does that leave us? How are you making sense of this?
It upsets me in actual fact, Tanisha, because we seem to be utilizing other pockets of the economies within the South African context and comparing ourselves to the rest of the world. There's nothing wrong with that. The problem becomes when you start to copyright whatever the rest of the world is doing and adapting it domestically. That becomes a serious problem for me. And one of the other factors is that our economy is very, very different from the rest of the BRICS countries, slightly different as well from the United States. Not so long ago when he was governing, he says, if you understand what the Fed is saying, then you are not listening, because you shouldn't be. You shouldn't be able to actually tell what they're actually saying. And I sense a mixture of unrealized realities that they've come to rely on the fact that they've got, like Chris rightfully says, they've got a situation where you've got a conducive situation where you can actually hike rates, but they haven't because they've got this dual policy that they've applied. But what does the dual policy say about both the consumer and the growth prospect going forward? When you're targeting 2% for 2015, you're not looking good, especially if you're South Africa and you're a resource-based economy. So that's what worries me.
Yeah, I think we need to also clarify that dual mandate. It's not an explicit dual mandate. If you ask the Reserve Bank directly, they'd actually be that was written to Jill Marcus says you've got to keep an eye on inflation, on economic growth as well, and that says it's a tacit dual mandate, and the moment you do that, you tend to defer to the growth side because of the need to generate growth, especially to resolve social problems in South Africa, and you with the Fed also, dual mandate, they defer to the growth. More than that, you defer to the inflation side of things. And so I would suggest that the Reserve Bank are reluctant hikers. That the next move will probably be another 25 basis points, but maybe at the next meeting.
25 basis points up.
At the next meeting, because I think by that stage we've got a whole host. We'll have the reality of the electricity price hikes, for instance, whatever in it because the rand is quite a bit weaker than it was, say, than say a few months ago. So those are the difficulties, and I think there's other administered price increases. If you see what the city councils are starting to propose in terms of rates and taxes and services, things like refuse removal and that kind of thing, it's quite sort of, my goodness gracious, it's quite a bit. It's double-digit increases that you're seeing. So you've got the weak rand and administered prices that are pushing that cost base in the economy.
I would want to know what are the key things that really stood out for you. For me, it was really about the Fed and the fact that we just don't have the same type of scope when it comes to monetary accommodation. I know that you look at Forex and you do look at currency. Do you think this type of tone from the Reserve Bank governor would...
Just also, I would have to agree with you there. I did pick up the inflation target and the Fed being quite a significant factor. So, look, at the end of the day, I think the challenges that South Africa is facing, they're very unique to South Africa, and I think I would agree with Clive and say that policymakers need to take a more proactive stance and start dealing with these issues that we're facing, as opposed to just waiting to see what's going to happen on a global scale and then sort of copying that.
Policymakers need to be more proactive. I'm going to pick up with you in just a moment, Clive.
Yeah, I mean, we want to be a unique economy. We want to be different. And one of the most bravest things I've seen this year, at least, is Vladimir Putin. And sometimes, like I always say, to take those bold decisions, there's going to be casualties. The casualties in this case might be that the South African consumer has to tighten further their belt. It might be that business has to compromise a little bit. But we're sitting with a situation now where we have to dictate, in actual fact, on the part of the entire African continent. We've already been overtaken by Nigeria in terms of growth and in terms of GDP numbers. The question is now, what is it that we do? What policies do we put in place that are practical to the South African economy so that we actually advance? And if we're not creating the kind of jobs that we should be creating, if the consumer continues to be under pressure, unfortunately that will put more pressure even on our budget, it will put more pressure on government to create opportunities, whether it's 6 million opportunities for jobs or whether it's anything else. But the point of the matter is, our unique circumstances of our economy need to in place that are practical to the South African economy so that we actually advance. And if we're not creating the kind of jobs that we should be creating, if the consumer continues to be under pressure, unfortunately that will put more pressure even on our budget, it will put more pressure on government to create opportunities, whether it's 6 million opportunities for jobs or whether it's anything else. But the point of the matter is, our unique circumstances of our economy need to be alluded to, and the government, the Reserve Bank has a mandate, monetary policy mandate, to make sure that that is put into the right light.
Chris, I'm going to pick up with you straight after the break. I would like to talk to you about investment boost and what this will mean in terms of growth in South Africa. I know that is one area that you were particularly interested in. We're heading into a short break, but we'll have a lot more analysis, so stay with us.
For 150 years, Thomson Reuters has driven innovation across the world's financial markets. It began by using pigeons to bridge a gap between exchanges. As time moved on and our customers' need for speed and clarity grew, Thomson Reuters led the way with innovative new technologies, which brought markets and their participants closer together. Today, Thomson Reuters Electron enables the enterprise in a world of change. It powers Thomson Reuters Icon, the world's most open and intuitive application for viewing and analyzing markets. Together, they create a world of possibilities for making faster, smarter,